Roth conversions get talked about like a magic trick that can lower your taxes forever. They're not a magic trick, and when they're done at the wrong time, they can actually cost you more in taxes. But when done well, they're one of the most powerful long-term tax strategies available. Let's talk about how they actually work. My name is Riley Siltman, and I'm a certified financial planner professional and enrolled agent. If you've heard the term Roth conversion and want to know exactly what it means, and if it applies to you, this video is for you. So first, what is a Roth conversion? A Roth conversion simply means you are moving money from a pre-tax account. This would be like a traditional IRA or a 401k into a Roth IRA. The amount that you convert gets added to your taxable income for that year. What this means is you're paying tax on it now. In exchange for this, your money continues to grow tax-free going forward, and qualified withdrawals are completely tax-free. Now, a common misconception is that a Roth conversion is different than a backdoor Roth IRA, which I've covered in other videos. A backdoor Roth IRA contribution is for high earners to get money into their Roth IRA. A conversion is a broader move. You're taking money from a pre-tax account and moving it into a Roth IRA. So why would anybody want to pay taxes on purpose? It really comes down to one core question, and that is, do you expect your future tax rate to be higher now or later? If you're in a lower income year, maybe you're between jobs, or you're waiting until Social Security arrives or other required withdrawals come in, or your income is just naturally lower, it may make sense to evaluate doing a Roth conversion. The reason being, you're paying tax today on dollars that are taxed at a lower tax bracket compared to a future date that has a higher tax bracket. This matters even more once required minimum distributions start. If a large pre-tax balance forces you to take out large balances in the future, it may make sense to individually, year by year, convert those assets to save in taxes over the long term. I want to talk about something that's commonly used with Roth conversions, and that's the concept of filling your bracket. The most common approach is not to convert everything all at once. You want to do it strategically, typically year by year. The idea is simple. Figure out how much room you have until you spill over into the next bracket. Convert up to that limit and nothing more. This allows you to convert meaningful amounts over years that deliberately lower your tax bill over time. This is instead of taking a large conversion in one year that can push a big chunk of it into a higher bracket. Now, I want to talk about a couple things that people typically get wrong with Roth conversions. One, not accounting for Medicare premiums. If you're on Medicare, a large conversion can increase your income and therefore increase your Medicare premiums through something called IRMA. It's a real cost that's easy to miss if you're simply only looking at the tax bracket. Number two is using converted money itself to pay the tax bill. If you pull from your IRA to cover the taxes, you are reducing the amount that can go into your Roth IRA. This effectively reduces the long-term benefit. Ideally, the taxes paid from outside funds, whether that's your withholdings, your savings account, or brokerage account. And finally, many people forget that this is irreversible. This is because conversions used to be reversible through something called recharacterization. But this has been gone since tax laws changed in 2017. Once you convert, there's no undo button, so this needs to be a thought out process and not done on a whim. Another thing to understand is that Roth conversions are not one size fits all. There is no universal right amount to convert, and it is not right for everyone. It depends on your current income, your future income, if you have a pension, your age, and your future estate planning needs. This is exactly the kind of decision that benefits from actually running the numbers rather than following a rule of thumb. Overall, Roth conversions can be an extremely powerful tool, but only if they're built around your specific situation. If you want to talk about whether conversions make sense for you, feel free to reach out. If you found this helpful, please consider liking and subscribing. Thank you for watching, and take care.